Hey everyone, welcome to your daily update for SOL and BTC. I said I was not going to do an update today because I have to go to an all-day stag event thing. But just looking at these charts, I figured I would do one anyway because they are pretty pivotal today. There could be some closes, and it is really tough to actually make any kind of calls when you're in this sort of last part of the New York session because those little algos can go a bit crazy, and then when the markets close and the books are thinner, then obviously the whales can push the price around and change structure last minute before close. But um, there is potential today that it loses some pretty big levels, particularly on BTC. So Sol kind of a bit deceptive. Sol's found some high time frame support and could definitely bounce from here, but of course it's not going to do that if BTC absolutely tanks. And yeah, we're sitting under some pretty important levels. We're sitting right on top of some pretty important trends. And the liquidity, if we look at it just here on the 1 day, has basically evened out on both. So it's in that exact situation where um, they're not really caring that you long right now, and you've also got to be a little bit suspicious of that. Like when you have a really fast bounce and you end up longing at a higher level because they run away from you price wise, then effectively you're shifting the liquidity pool in an upwards direction, and that's actually positive, which is why V-shaped recoveries tend to be bottoms and all that kind of thing. Um, but if they just hang around and let liquidity build and not really go and take the top side, then that sort of implies that there might be another sweep coming to the downside. So 1 day liquidity is basically even out on both. 7 day, you'd think that they're going to push to the upside, but we'll have a look at these structural closes and see how they close today. And 30 day, you definitely think they should push to the upside. Okay, so that's sort of where liquidity sits, but let's just have a look at the closes. So, right, so daily SOL BTC strength, it came down. So we had that bad close where we basically ended up just underneath all the resistance and the trends. We rejected off the trend, we came down, we found support on the trend. So we're literally just forming this doji. What we haven't actually done is we haven't entered the hold level. So that 16707 level, that's the sort of level you need to get into if you actually want to break this downtrend. So it sort of says to me that we might have another sort of surprise dip down. But because we haven't really closed these levels up here, there's also the ability for this to pull back up before the end of the day. So we've got 4 hours. And if it was to pull back up, it would be on top of that interior trend again, and then it could actually bounce off that trend and continue up, and therefore the next day could break that downtrend. So it's just in this really critical spot where it didn't enter the hold, and it's the same as when this range was formed. It didn't actually enter the body of the hold, so it's almost like it's just fake, 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 fake. But basically, I would say we need to be looking at this today to see whether it pulls up, opens on the top side of the trend. Absolutely bullish case would be it gets back up above that 17409. But if it closes in here, then you would sort of expect it to reject the trend again and then target the hold properly this time, maybe at the 16707 level. And then it's up to that hold as to whether that hold can break that trend. So yeah, as it currently stands, it's just very tricky, dodgy looking PA. And so if we look at that on a weekly level, it's retested the origin support level. It's found that support and bounced, which is of course defied the trend. So it's good that it hasn't lost that level yet, but this is sort of what I mean by there's some pretty key levels in play right now, and we've got 2 days and 5 hours to go. And if it closes down under that, then the chances are it can take a pretty decent dump all the way back down to testing some of these lower levels and lower trends. So if we have a look at the safety assets, so they're basically doing what we don't want them to do. and they're pulling back up above the non-hard closed 66.72 level. So we want to see this come down below this level by the end of the day. It's not such a problem if it closes in accumulation, but if it does close in accumulation, what you really want is you want the trend to shift to a nice long wick, because then you can reject off that trend and you haven't hard closed the level. So something like this, is a bit too close to the new trend, and of course it can open on the top side of that trend and go up. But if it was to pull back under the level, create a big trend or a big wick, and then come up, reject off the lot and go down, then you'll see a recovery, in your risk assets, at least for a short while until it comes down and finds the next potential support level. But if it does close up here and we're above this 66.72 level, and we're too close to the new trend, then it can just open and propel itself up off those and start to target these 68s, etc. again. So yeah, it's in a pretty critical area as to whether you see a big further dump on altcoins or whether or not you just close down a little bit more and then have some kind of resistance, which could actually see that little bit of a rally. So let's have a quick look at the weekly. And so you've got a couple more days. You really want the weekly to pull back down, but at this stage it's looks like it's just trying to push up. Okay, let's check out these totals. So if we look at total market cap excluding BTC on the daily, it looks like we may end up closing below the interior trend but above the exterior. We've tapped the break level of the daily range, which means that break level we either need to spend now time above that break level to convert it into an origin support and then bounce it, or we're just going to go through it. Now, what is quite interesting just on this chart is that it stopped just prior to hitting this 1.38 level. So that sort of says to me that they want that level to be support, because otherwise they would have hit it, and that stops it from basically becoming support. But it might mean that that is where we dip to, if there is another dip, and then a bounce up from there. This kind of big candle that's come through all these levels when we had that big dump the other day, and this time spent up here has actually meant that all of these break levels have become support levels, and it's really just a case of are they going to continue letting that support grow in an upwards direction? So maybe this break level that's now been hit at the 1.42-ish area, 1.42. If the next day doesn't touch that, then this becomes support. And then what you're sort of seeing in that instance is actually that although the price looks really bearish, what you're actually seeing is it's not, and what's happening is the support levels are actually coming up, which means the price will then continue to go up and actually try to target some of these upper levels or break back into these upper levels. But I'd still be very wary of that 1.52 level there, because we've spent 2 days below it in distribution. It was the entire support of the range. So pretty much it's key that it gets back up above that. Once it's back up above that, then it's basically back up inside this upper range again. But unless it gets back up above that, then it's probably just going to keep heading down, testing support levels until one of those support levels actually has the ability to reverse it. So it's a moderately bearish close, really, because the next day is the important day. And the bull case would just be simply that it opens the next candle, bounces the trend, goes up. And by bouncing the trend, it has the ability not to touch the break level. And if it doesn't touch the break level and bounces off the trend and spends one more day up, then, like I say, that support is going up. So tomorrow will probably be the really important day for this. But yeah, it's overall in a pretty bearish position. Once you've hit a break level, it's 50-50 as to whether you convert it or don't. Okay, let's have a look at this from... Yeah, and as you can see on the weekly, it's very, very similar. it hasn't actually hit the weekly break level there that got spiked through. So the daily is the weekly, according to this. So same level. And it's already down below the 1.51 level. So by the end of the week, you really want to see that get back up inside that level and bounce. And this is the one that it ended up rejecting off. So if you look at how that was created, the price came along after all this time, it hit it, didn't hard close it, couldn't get back to it, got above it, couldn't hard close it to the upside, but by this point it was already a rejection level because of this candle here. And so this realistically was a whole bunch of positions getting closed, into whatever euphoria existed in those moments. And then down it's come. This big rejection, I don't think, like we say, no one really would have seen that coming unless they were watching 11-week charts. But then when it stayed underneath here, it's come back up and tapped it. And then this is now our sort of secondary rejection. So really for this to get bullish again, it's got to get back up at least into this 1.51 level by the end of the week, preferably up above the trend, and then it can try to target these higher levels again. But yeah, staying down here for too long is then putting it in a position where if it doesn't tap that 138 level, then in the next week it might tap it and then come back up to the 151, but it doesn't mean it can break the 151 because you don't know that that far in advance. So if anything, what it would possibly end up doing is actually tapping it, coming up to the 151, pulling back down again, shifting the trend, bouncing the trend, and then targeting the hold. So it's this pullback might actually drag out for a bit longer based on the structural options that has on the weekly. Either that or it's got to fix it in the next 2 days, really. Okay. Let's look at this from TXY. So that's in a really bad spot. If you close a day down here, yes, it can be a deviation, but it's underneath the range trend. It's hard closing the upper range if it closes down here today. And yeah, it's pretty stuffed from a dollar strength perspective. So yes, it has all these support levels down the bottom here that it's bounced off. But yeah, unless it gets back up inside that range by the end of the day, it could just give a temporary push up and then another rejection. Would be very, very possible from that. So, and it wouldn't be till the next day that the trend could move. So what you're wanting to see is it get back up above 328.47. And if it doesn't, then you want to be very careful about when the next day, if it hits the backside of that 327.17 area. Okay, so total minus stables. Again, it's just right on a cliff. There's a whole bunch of range trends and various things coming through here. And as you can see, the price is just teasing on this level down here. So this 3.3 level, it can either close below it, and the bear case is it closes below it and it just has an instant rejection off the backside of that range trend and you get a secondary dump. Or the bull case, of course, is that it closes just above it and then you can bounce off it. But even if you bounce off it, you're going to then run into the backside of this one up here, which is only like 3.32. And then you're going to run into these horizontal levels up here. And most of them are not hard closed until you get up to that 3.38. So the 3.38 could actually become a retested area. But after it's retested it, it's still in the downtrend. So the reason you can see kind of like a little rally could come about in this sort of instance is because, number one, the trend will shift today. So it'll move from over here to the underside of this wick. So then you could either wick down and then back up again, or you could go up, hit that, and then come back down. But we're also very far to the left of the actual daily resistance trend. So there's room in here for volatility and for price movement in both directions. But how it kicks off is probably going to be determined by whether they just sneak it back up above these range trends by the end of the day. So 4 hours to go. Or whether they close under these range trends by the end of the day, and then yeah, you could look at a rejection off that. Okay, so let's look at BTC. So BTC on the 1 day is just again stuck under this pretty nasty downtrend. Really, it came up, it tapped the backside of that origin level. I think we said that yesterday, that you could see this sort of go up to about the 109 area and then have a rejection. So, and that was because we closed under that level. So that's about the most bearish kind of rejection you can have. It didn't bother to even retest the range trend up the top there. It just went and tapped the backside of the origin support, which has now flipped into resistance, and then it's just started to push down through all of these levels. So the same thing basically can happen again. It can be, just rinse and repeat. It can open a candle, it's now under all of these 107 levels, 106 levels, it's under, even, I don't know what that's playing with now, it's under that 106,475. So if this doesn't move back up by the end of the day, it can just repeat what it did yesterday, which is go to whatever one of these levels it feels like. It could be the first one. You could just see an instant daily open and then a dump. It could go up to, say, whatever one lines up with the trend, which is probably the 1.7 area. And 1.7 was, good support. It bridges and balances the candle, if it goes up there. So, maybe it goes up to 107, 107,400, and then just rinse and repeat. Yesterday, it could just reject off the backside of the trend again and reject off any of these levels. So, getting lots of alerts. So by the end of the day, if this trends are moving around on the 4 hour, we're closing New York session now. If the whales want to save this thing and actually just make this a really big fake out to get people to capitulate, what will happen is pretty much for the next 4 hours, this will start to reverse. It will get back up to a point where it can open on the top side of one of these levels, and then it'll be in a position where it can actually open the next candle above the trend, and then you could potentially say, hey, look, they're just trying to get you to fake you out, or they're trying to get you to put your buys down at a lower level, and hence they're not going to go there, and they're just loading up here, and off they go. So the bull case for the next day or so would be that it could come back to retest the backside of the broken range trend up here, which is now going to be hard closed by this candle, if this candle does not become accumulation by the end of the day. And that level would be about 110, but you wouldn't expect it just to be going there based on the fact it's still stuck under this downtrend resistance, and because it looks like it's going to close below all of these levels. So they may even be trying to push it down so it closes below 106 and then reject 106 to come back down here and hit the 105s. And the first untested support level that exists here is this 103.045 level. So all of this stuff is technically tested, so it's definitely well within the realms of possibility to see another dip back down to a lower wick than this one and a continuation of the downtrend. So it looks pretty, just looks pretty nasty actually, the old BTC price action at the moment. Looks like they really want to send it down. Okay, looking at, so if we look at the 17-day, just this was yesterday's close, but just you can sort of see it came back down, it tested the prior broken trend, which is that little hard to see dashed line coming through there. It tested the lower trend and then it's pushing back up. So this is sort of why you got that bit of a dip and bit of a bounce. And this could keep pushing up to test those 109s, 110 sort of area again, or test the actual range trend that's coming down. So there is a bit of confluence just on some of the higher time frame stuff that it will go up and try to test that range trend, but it's still in a downtrend, which is probably not what people want to hear if they're really, really bullish on BTC. Okay, the 2-day, it needs to push back up over that 107 area by the end of the day. If it doesn't, then it's dangling below the trend, and it's also sitting underneath some pretty important levels. So it's, as far as bearish scenario goes, something like this has got a support level that's from the prior range, which is down here at 102, 102.561, and that particular level could create support, but it could also just end up being the target of a rejection straight off the back of the 107s. So if this was, say, bear case, it's just going to open the next candle, push into that 107 area, and then it's going to dump down to 102. And then 102 would have to try and find support to bring it back up. The trend doesn't move with this candle, so you don't actually have trend support unless you get all the way down to the 95 area. And they could just be tricky and have the next candle close with a flat bottom, move the trend, reject the trend, keep pushing down. So just from a bullish case perspective, it hasn't actually lost the upper range, and it hasn't technically hard closed outside of the upper range. So if it was to push back up into the 107s today, then that would allow it to have a bit of a move to the upside. It could try to recover all of this in the next 2-day candle, and if it gets back up above that trend again, then it is a deviation. It is just to get people to capitulate, and then it bounces off that trend and it comes up here and it targets this 2-day hold, which is up in the 119 to 120 area. So as nuts as it sounds, you've basically got a situation right now where it could be just purely to get people to capitulate and buy all their positions. Within the next 2 days, it could be up above that 110, because that would just be a retest of that upper range that's getting broken today on the lower time frames. It would just be a retest of the hold on the 17-day, which is already in play. So if it does that and it actually engulfs this candle, it gets back above this trend in the 110s in the next 2 days, so that's, let's say, weekend pump, then it could bounce off that trend and then just be on its way, because there's just a really big air gap up there. So, right now, what else we've got going on? We've got the 5-day. So 5-day hasn't lost its support trend. It's bounced off its support trend. Really, we're just waiting to see if it actually gets back up over the 107s by the end of the day. And then it's got a range trend up in the 108s it could retest. This entire thing is just a dive. So it could come back up and retest the prior broken trend, and that's like 115. So it's, much like the other time frames, it's just, is it fake or is it real? And then we get to the 10-day. So 10-day is where things start to get a little bearish, because we might be creating another hold level up here, which is your 109, sort of 109.1 to 109.4. But we still haven't actually lost that trend, and we haven't lost or broken or done anything really with these. So the top side of this potential would be to retest the downtrend again, or the backside of the uptrend not broken, which is sort of around the 114s. The bearish scenario is that we are creating a close under this origin level at 108.3. So the rejection of 108.3 would target something bigger, and unfortunately there isn't really anything bigger. So that's kind of where this gets very bearish very quickly. And there are a few people talking, online about hitting these 88 or 82 sort of levels. This could do that, because if you actually lose this or reject off this origin level, you really need to find, maybe that level at 91.142. And that could be a bit of a jokes, type scenario. If they do have some kind of big scammy wick down there and everyone is waiting for 88 or 82, they might bounce off 91.142 and then leave all those orders behind. But yeah, the other bear case too is that we know range trends get retested, and we know that the front side hold of a new range is often tested before there's any kind of move potential to a higher high, and the front side of this range is 82, and the range trend is down here at 80. So yeah, you've got just as much of a chance that this rejects off 108 or 109 and then starts trying to power its way down to these lower levels, which yeah, it's as much as we think it's going higher. There are a few people now starting to say the top is in, and maybe they're right. Okay, 28-day. So hold level forming at 114. We're getting potentially a close below the wick. So we know that the same thing applies in bullish markets as you can bounce off the wicks when you're really bullish. Well, you can bounce off the wicks when you're really bearish. So you really want to see this thing closing up above 107.212 for the day. And if it does that, it will be moving the trend. So that gives it the ability to bounce. So we'll shift to there. And I guess what you would look at then is to see if we actually can get a move. It's a very big time frame, so you could, back to sort of what I said, we might be spending a bit more time down here. This kind of thing could bounce the trend, it could dive the trend a bit, it could basically do a whole bunch of stuff over a very long period of time, and then eventually what it would do is it would probably swing back round to try and target that 114 level. Or the bearish scenario is, you can see where they're closing it now, or trying to keep it now. They're basically sitting on the break of the 29-day range. So the most bearish thing this could actually do is close even $1 or $2 under that range, reject instantaneously off the backside of it, and target to try and break the new trend, which is very bearish price action, but that is the kind of thing you're going to start seeing if we do move into, or if this is a start of a bear market. So yeah, watch the space. 3 hours to go, 3 hours 49 minutes to go. The intention of whether it's fake or real pretty much comes by what they'll do in that last wee while. Like, do they keep it down here for the next 3 hours? Do they make it look as bad as possible for the next 3 hours, and then pull it up in the last half an hour or 15 minutes or whatever? And then you sort of know, okay, yeah, this was just get people to capitulate, and we've got pretty good confidence we're going to go back up to these higher levels past that. So okay, what other closes do we have today? Okay, 58-day. So it's that key level again showing up, 108.350. You don't want to spend time under 108.350. This is actually also in a position where it could open on the wrong side of the trend. So this is kind of like one of those very bearish possible outcomes. If it doesn't get back up above that 108 level and it opens a candle on the wrong side of the trend, there is a prior broken trend which is coming through here at 99.7. So yeah, you could see another flash crash down to 100k or lower. The whole candle is 93, the range trend is 83. So just we've seen it happen once already, and the only difference this time is that there's so much liquidity to the upside it would make more sense for this to be a fake out, get people to capitulate and go up. But there's also a lot of people out there who would be buying the dip. And ultimately, if there aren't a lot of orders in the order book, and if they do, if market makers see uncertainty and they withdraw their liquidity, it doesn't really matter that there's is or isn't liquidity to the downside. If there's no buying pressure to the downside because books are thin, market makers are de-risked, and then someone just sells a bit of BTC and pushes this thing off a cliff again, it can just come straight through all of that and another flash crash because there's just nothing there to buy it, and then you'll see insurance funds, ADL kicking in and all that kind of thing, and it will pretty much be a rinse and repeat. But it would be a rinse and repeat with a lower level of liquidations because it was just a drop based on thinned out order books and someone else just trying to get one more, decent entry price for a move. So yeah, that's relatively bearish. I think if it does come up by a couple of $1,000s and close over that 108,350 area by the end of the day, then you could say big fake. But if it doesn't, I'd be a little bit inclined to say that they're gearing up for something else. This also didn't quite retest that top trend, which also implies maybe fake because it's kind of left it as a target to be tested if it gets back up over this level. So, okay. And this is creating a very high time frame trend today on the 145, but as you can see, it's already in a position where it would open on the wrong side of it, and have to go and try and find some kind of support. So that's yeah, if you're going to see a blow off top, it would basically be a case of opening a candle on the wrong side of this thing, coming up to some unreasonable level, which basically just would be aligned with taking all the liquidity and then dump. So that's what that could be doing. All right, let's have a look at SOL. So oddly, SOL actually looks a little bit more bullish. So it's pulled back up into things like that range trend so far. Obviously, yes, there's time to go on this. We did hit some pretty key high time frame levels, and I think you could argue that we hit them and bounced a little bit bearishly because last time we hit a level of this sort of size and caliber, we basically shot up to 295. This time we've sort of hit it. We've bounced back up above the trends. It seems to be more of like a slow creep to the upside. So this is the 72-day hold that we created the other day, and also the 96-day backside range has been hit. So that's this candle over here on the backside of this really big order block. So it's been tapped perfectly at 174.5, and this should be trying to push its way up to 213s and then continue on to the upside in theory, because there's not much for this to retest other than this trend all the way up here at 300. So kind of the polar opposite of what you've just seen on BTC. BTC just looks sick as a dog. It looks like it wants to die. Unfortunately, it's going to be very hard for SOL to go up if BTC is dying, but this is one of those weird situations where it does look like SOL is potentially going to do something a bit independent of BTC. So looking at the 1 day, it's going to close under that 185 origin level from all the way over here. If it does, I should say. And therefore, you could then get a move up to 185 and a rejection back down to test, one of these lower levels. We still haven't actually tested that 173.5 level. So the reason I want to show you that high time frame stuff at the beginning there is because this low time frame looks like it might hit the backside of this and come back down there, but that high time frame stuff is pointing up. So it's again sort of implying that this could just be a pretty fake sort of move. You know, it looks bad short term, but is it bad is the question. So looking at the 17-day close from yesterday, so it's already sort of pulled back up above the range trend. It tested that level there, which was the 175 level, and historically when you look at this level, this went through it, this hard closed it, this bounced it, this went up and then down, so all-time high. So now look at it over here, this has gone through it, this has hard closed it, this kept going up, which was obviously your lovely fake out, because once we hard closed it, we should come and retest it. This has retested it, it's gone very deep and grabbed all that liquidity. We're back up above it now, so you know, the question being, are we then going to see some kind of random ETF approval, blah, 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 whatever the news is, etc. But just fractally, the last time we were able to do this, we went to those higher levels, which is what those high time frames are implying has started now. So I don't know if it's very hard to say, is SOL going to have some big dump because BTC falls off a cliff, or are they just faking everything out right now to get people to capitulate? And I said in the Discord yesterday, there's a lot of people right now, online influencers, etc., talking that the bear market has started. And I think probably the key point is that when everybody thinks the bear market started, it probably has not. And that's, you know, that's when we might go see our blow off top and our real final move. Okay, so 2-day. So 2-day bounced off the support level. So this was down here, that 175.6. So all that confluence, you know, it's still under the downtrend, but it only has to come up to about that 184 level to be able to open a candle on the other side of that trend, which then gives it the ability to continue moving up. We have hard closed some of these 196, 199 levels. We've hard closed the trend. The trend is going to move to the bottom today, so that's easier if they want to actually recover the price. And we have the untested hold up here, which starts at about 216 to 219. So structurally, all this thing has to do today is close like this, move the trend, close up just a little bit, so that'd be good. You'd be on the top side of the downtrend, have another fake move to the downside, hit the new move trend, and then find its way up to the hold level. That would be the bullish scenario. The bearish scenario is that, yes, we are below the break level again, but we were there, you know, a few days ago as well. We haven't hard closed this 190 break level, so there's no reason why they can't just push back up through it again like they did and at least go back to the retest of 195. And the reason it's called a retest is it is testing it, so the outcome is still 50-50 when it retests it. It could get back above it and then keep moving up. The trends wouldn't be here anymore. They could retest the prior broken because they'll both get broken. Once again, if they fail or they recover the prior broken, then they can push up to the exterior or the other interior, I should say, trend. Really, there's just not a huge amount to be obviously bearish with this. It does look like it could be more of a fake move in play based on the higher time frame. Okay, looking at the 5-day. So 5-day is still above the down facing range trend. So it's hit its whole candle, it's had its rejection, it's hit the minimum level being the 1618, and if it opens a candle here, it's still technically above the break of the prior range, it's still above the uptrend, and it's still above that down facing range trend. So there's no reason why this actually, like, absolute most bullish scenario that you could see come from this is it could just tap that range trend and then travel up to retest numerous levels up here, starting from about 196, 202, 205, and then it's on to what would the next level be? Well, it'll be the break, which would also be a retest of the prior range trend, and it is quite common for things to move from range trend to range trend. So that's you're up in the 230s, the 240s before you know it. All it needs is a tweet. Effectively, the structure here is designed to bounce, and if they want it to be bearish, then you'll know about it in the next few hours because they'll just pull the price down below this range trend, and then they'll use the backside of it to reject down. So that's and then this level down here at 161 has already been geared up to be high time frame support because they've failed to actually get back to it. So break level hit, price go up, price hasn't got back to it. It's already geared up. At which point this level that it's at now, this 175 level, it's not geared up to be high time frame resistance if the price goes underneath it because it's been hit. So you can't flip a standard break level like that into an origin level. So yeah, they're either going to have to push it down in the next couple of hours, get in below this 180 sort of level to bounce off the backside of that, or yet again it's another time frame that is potentially just a fake looking drive to get people to capitulate. Okay, 10-day. So same thing. You've got this level here at 184.827. They're either going to close under it and reject off it, or they're going to sneak back up above it. Then that would mean you would be looking at that 188.786 level. And if they were to, because that's not actually hard closed, it's no different to sort of the structure you see over here. So you had this level, it became a high time frame polarized level here in July, it got hard closed here in November, it came down here, they sort of faked below it, and then they just powered through it, just off to 295. So if we take exactly that same level now, we hard closed it here in September, we've gone back to it. Question is, do you now see this? Looks like it's got the ability to do exactly what you saw over there. Maybe we get that one little wick, like this wick that we got on that candle. That could be that next little push down. But it's hard to actually be bearish looking at that because they haven't hard closed anything, and it looks more and more I look at it, the more I think it's a very fake sort of move. 29-day. So the 29-day is above its trend, but may create this hold level. Right, so let's say it closes below that 187. You might get a push up into the 187 and then a push back to the trend. But it's a very, very, very condensed little range, that, like a lot of compression. And the other target for this, the actual full-blown fib target for this, is down here at 147. So at some point, the price is going to go and hit this 147 level, but it may not come about through this. You might actually see that, the instances like what you see over here, where the candle actually completely flips to the upside, then sweeps down and goes up. This could completely flip to the upside, then sweep down and go up. It's the highest risk type of fib trade because it's just a single candle, and the trend is pretty much going to be right there. So when that opens, there's just the ability for this to tap the trend and just push, straight through the hold level, or it could compress for a bit longer in here, but it's not really completely a bearish look. If anything, it looks like it's just swept that trend liquidity and it never rejected off the topside trend up here at 252. So when that trend shifted, it just dropped, right? So if it swept the trend liquidity down there, there's no reason why it wouldn't go and actually deposit it up over the top of that. So, there's just as likely for this thing to be going to 242 as it is for it to be going equivalent sort of distance, which would be in the 270s, etc. to the upside. So, but if you just want to be really careful, you just pay attention to that level, because if it starts to show signs, or if there's some news that's been sitting in a manila folder waiting to come out, suddenly comes out, when the price hits that level, then just that 187.855 level could create a rejection. Also, you could watch this for polarity today, like in the next 3 hours. If it pulls the price back above that, then chances are it's going to go much more to the upside. So keep an eye on that one. And I think I'm going to be late for this breakfast, so I better go. 58 day. Not much there other than an interior range trend, an interior trend that will form to give it a bit more support. If it dumps, it'll have better support. And that's above the range trend. If it dumps, it's got a range trend to bounce off, but it really needs to be above 189 if it wants to be any sort of structurally significant change there, and then it could go test that upper trend. Right, that's us. Better go. Like, subscribe. And hey, if you hit the don't like button, then please actually leave a comment as to why, so I can learn from that. Yeah, catch you later.